All right, it looks like we're live. We are live now. So, hey guys, welcome to this episode of the Military Retirement Blueprint Live. I am Trevor Maxwell. Scott Tucker is not with us today. He's traveling, but we're still trying to make sure we do this weekly live session where we talk about some of these issues that uh, are relevant to active duty and transitioning military folks. And today, we're going to touch on some recent events that just occurred. If you've been following the news, you are probably aware that the aftermath of Hurricane Helene. A lot of folks out there in the Asheville area were got hit pretty bad, and uh, if you haven't seen it, go Google it. It's nasty what's happened out there. But one of the topic that I wanted to talk about today is something that I harp on a lot, and a lot of people are always kind of surprised when I start talking about this. We start talking about our home, auto, and liability insurance, and the thing about that is most people, when you ask them about that, they're like, "What do you mean? Why is that part of a financial plan?" Uh, most of us are so focused on, hey, how much money should I put in my 401k or IRA, or, what permanent life insurance policy should I have? Um, the reason that we focus on that from a professional planning standpoint is because that is your safety net when plans don't go according to plan. Those are the things there that take care of, like, hey, what if I get into a car accident, right? Am I worried about how much money I have in my 401k, or am I worried about, how much insurance do I have? Uh, so really, if you understand what insurance is, technically it's the transference of risk. Um, to a third party. And so really that's what we're going to look at today. And what this video, if you're not watching it live, you can watch the recording on Military Retirement Blueprint YouTube channel. I will post this on my own personal LinkedIn feed, and we'll have some other stuff. You can also go here to the militaryretirementblueprint.com, which is our insiders portal, where we have a ton of information on the military transition process, as well as some of the big financial decisions you're going to have to make, like, is the survivor benefit plan a good deal for me, or what do I do with my TSP when I retire? But to get more into the topic of today, when we're talking about home, auto, and liability insurance, I invited somebody who's an expert in here, so you're not just listening to me talk about it. You're having somebody who works on this stuff daily come in and talk about it. So I wanted to introduce Chris Stone. He works with E3 Insurance Advisory Group. And Chris, go ahead and say hi and introduce yourself.
Yeah, so my name's Chris Stone, owner of E3 Insurance Advisory Group in St. Louis, Missouri. And what we are is an insurance brokerage. So we do all lines of insurance, whether that's personal, home, auto, umbrella, or business malpractice, professional liability, and cyber. So we do all of it, because the way we look at insurance, it's asset protection. And so what we want to get into today is talk a little bit about the phenomenon of weather that is getting more radical as everything progresses. But I want to touch on a couple of personal insurance buttons, not just go over home and auto, but things that are seldom brought up in the industry, and they're the unknowns and the things that you should look for, especially if you're active military.
All right. And so here we got some slides here that we'll put up real quick too. His website there, e3insure.com. I'm posting in the comments section here right now a link that you had sent me that talks about, like, hey, a quick checklist. I know everybody loves checklists. Like, how do you make sure I got all this stuff? So wanted to put this here in the comments section. I'll put it on LinkedIn personally. I know it's on YouTube, but yeah, so good info on there. One of the things that I like about your guys' website, kind of like what Scott and I do, you put a ton of information out there to give people, what they need to make well-informed decisions, which is something that they don't get a lot of. So make sure, when you get done here, after you listen to this talk, go to the website, check out the link that I put down in the comments section, and a lot of good info for you to chew on as you tackle this topic. So here we go.
Yeah. So one of the things we want to get into, and on our website, we have a university. So our whole thing is we don't sell insurance, we educate on options. So it's always trying to get the information from the people that have it to the people that need it. But one of the things we wanted to lead in here on is Asheville, North Carolina, right? So as I checked yesterday, right, there's still 2 million residents without power, and at least 116 deaths is the result of a storm. Entire communities under several feet of water, right? So the thing about weather is it's getting more radical. And we see that. If you want to go to the next slide here, Trevor, right? So one of the big things about these catastrophic storms, and in the next slide that we'll get to, we'll talk about how prevalent these storms are becoming and why you need to be concerned, because it's not if, it's when, is if you deploy, if you're active military and you're married or have a spouse, right? The important thing with your insurance policy is whoever's first name is on it, they are the primary named insured. Anybody else on that policy, other spouse, him, her, or kids, they're additional insureds. Okay. Primary insureds, though, the named insured actually has full rights to the policy, meaning they're the only ones that can make changes. They're the only ones that can cash checks. They're the only ones that can file claims. Why is that important? Okay. For instance, for like Trevor, if Trevor were to deploy, okay, and he was the named insured, his wife would not have the ability, if they lived in North Carolina and are in this incident, to even be able to get insurance started at all. So it's an important thing to realize if you're active military and you're going to deploy and you get shipped around all over, to make sure that your significant other is actually the primary named insured, so that if you're gone for an extended period of time and the worst thing that could happen happens, that they're able to safeguard and get the insurance started, get the claim filed, get the money they need, be able to cash those checks, and be able to have rights to those insurance policies.
Yeah, that's something. I'll add something to this. Being in the Navy and having been on a ship myself, especially because we live near the ocean, hurricanes are a big issue. And people who are in the Navy know that if you're on a ship, when those hurricanes come, those ships put out to sea because that's the best place for them. And if you've ever been on an aircraft carrier in the middle of a hurricane, it's nice. Like, it's a good spot to take naps. I've never been on a small boy in a hurricane, but to your point, yes, you're not there when that happens. You'll come back after it happens. So you want to get the ball rolling as soon as possible. So excellent point there.
Yeah, so here's a big thing, right? Statistically. So here's the thing. Why is this becoming the new norm, which has happened in North Carolina? So prior to 1990, there were only 30 large weather claims that reached $1 billion in damage. Now we have 18 to 25 of those per year, right? And so when Texas started getting winter several years in a row, which they're not insulated or protected for, that's when more people started paying attention to this. This map we have in there shows the amount of climate disasters we've already seen in 2024. So the thing is, what happened in North Carolina, even though they call it biblical, is the same thing now with Oregon, primarily a wet state, is now a wildfire state. Right now, Texas always had wildfires. They're known for hail. Now they're known for winter storms, and they don't have the capacity to deal with winter. That first snowmageddon, as we called it, was $100 billion in reinsurance money. And it's not because they lost power. It's because those homes aren't insulated for winter. So when they start getting snow in Texas 2 years in a row, this is what we have to pay attention to, because 2023, quarter two, was the most amount of insurance claims filed in U.S. record history in one quarter. That caused reinsurance, where the carriers we buy insurance from, raised their rates 50%. And they were hoping that 2024 was going to be a soft landing. Well, 2024 has already surpassed 2023, and we've just basically entered into hurricane season. And one of the things with the insurance rates that everybody are talking about, how volatile it is, seldom, when we're in the Midwest, we always blame the coasts. But if you can see by the map, it's actually the center of the United States that's actually having more weather claims by a landslide than California and Florida. But the reality of this is, folks, is weather's only getting more volatile. I believe it will continue to, because history is showing that. So it's important, A, to know, do you have the right insurance? And is it set up properly for whoever's home to be able to make those decisions and follow those claims?
Yeah, that's crazy. I mean, who would have ever thought that Asheville, North Carolina, in the heart of Appalachian Mountains would get wiped out by a hurricane?
100%, right? And that's the thing. What insurance is, right? It's you don't want it to happen, but if it happens, hey, how do we deal with that? And obviously, North Carolina is much bigger than an insurance and a reinsurance. It'd be FEMA, government, etc. Because they estimated the damages already to be 160 billion. I assure you, they'll far surpass that because we've dealt with storms much bigger than that in Texas. So here's the thing that most people don't know: what is an insurance score? Okay, and why does it matter? So an insurance score is a combination of credit history, claim history, and insurance history. Why is that important? A lot of people don't understand that insurance, home and auto insurance, is a financial vehicle. Meaning, if you have several claims on your record, or you have poor credit or late payments, it will all affect the amount you pay monthly for auto and home insurance. That is your own insurance score. And insurance carriers do what's called a 7-year look back. So they're looking back for any activity up to 7 years, and they're rating those 7 years. So it's very important to know what's on your record, how not to get things that don't need to be on your record on there, and obviously your credit. Your credit will affect the amount of insurance you pay. Again, a speeding ticket, you don't pay an attorney to fix it. It's on your driving record, and it will gnaw at you for 7 years. So it's very important to understand how they rate insurance. And then again, insurance is rated by zip code. They crime score the area, the city you're in. If you're in Chicago versus the country in Missouri, it all has different factors. But the only one you can control is your insurance score. They also look at how often you shop insurance and bounce around. And all of that can be detrimental to what you're paying monthly and annually.
Yeah, it's kind of like you were saying there, like using credit cards, like when you have too many or you're using them too much or not enough, right?
That's correct. Yeah, there is a method to the madness, right? So another big tidbit we try to educate folks on all the time: why you don't shop insurance with your deck page. Okay, what's a deck page? A deck page is your home and auto insurance they send you. It's the front 2 pages typically that show the coverages, like what the home A, B, C, D is covered for, and the amount you're paying. Same with the auto. It will show your limits, the car, how much you're paying. That's a deck page. Usually people send those to an incumbent agent. And then that person, in this case, beats the rate. If you see the one on the right, beats the rate, and then people move forward with that. Here's the huge issue with that. Home deck pages and auto deck pages don't show exclusions and definitions and endorsements. That comes in the policy. So one policy, let's say the one on the right is $872 versus the one that's $1483, but all the coverages match. So you would be most likely to move forward with $872. However, the home on the right is named peril, meaning it's covered for 9 things. Everything else is excluded. The left one is all peril, meaning it's covering everything unless specifically excluded. The one on the left has twice the coverage for weather activity than the one on the right. That's why you don't shop with your deck page. Typically, your deck page could already be wrong. You could be underinsured. 60% of homeowners are. So if you have somebody just duplicating bad work, but saving you money, you're going to end up with a really big financial loss. So do not shop insurance with your deck page.
Good to know. Great point. Post I'm working on today reminded me of this, what you just said there. Book written by a guy named Don Blanton called The Personal Economic Model, where he said there's more to be gained by avoiding losses than there is by picking winners. So I think that's super important.
Another quick tidbit: real insurance companies don't advertise. Do not be fooled by discounts and niches. I'm not going to name carriers here. That's not in our interest. The reality of it is, though, most of the carriers we offer, we have access to every viable carrier. The large ones, the AAA rated carriers, they don't run commercials. They do not advertise at any kind. I'll give it to you the way that Lamborghini was asked why you don't have commercials, and they said the people that can afford a Lamborghini aren't at home watching TV. It's the same way with real insurance carriers. I get there's funny commercials, there's in your face, only buy what you need, even though you don't know what it is that you actually need. But do not be fooled by discounts and niches. It's a gimmick. Those are marketing companies trying to sell you low coverage insurance. And that's exactly what it is. And that's where most people find themselves in trouble.
I think something else about that too, like I always like the ones where like they still call me by my rank. Like nobody cares about that. Like,
it's right.
especially
Yeah. So deductible and roof changes. This is a big one in the United States after the damage we've seen this year. So the most critical thing right now with roofs is most carriers used to be 15 years or newer, full replacement cost on your roof, 15 years or older, depreciated value, regardless of 30-year architectural shingle, because it had bound to be hit by a storm already. Most carriers have changed that rule to 10 years or newer, or they won't write the home at all. And most states are now going to 1% or 2% wind and hail deductibles. Now, where I'm at in Missouri, now we write in several states, but in Missouri, we had $1,000 deductibles, $1,500. They quickly went up to $2,500 this year, then to $5K. Now they're all at 1%. Why is this important? A 1% and 2% deductible is 1% or 2% of the replacement cost of your home. Okay, so that's very important to understand. If you have a $300,000 home, if you got a 1%, you're at $3,000. If you got a 2%, you're at $6,000. And a lot of carriers used to not change deductibles unless the client did it. Usually you're grandfathered in. However, a lot of carriers are forcing those deductibles. So you need to look at your policy renewal, because a good chance is that your deductible went up and the premium went up and you're unaware that the deductible is higher. And that's important in case of a claim on how much money you should have set aside. Because if you had a $1,500 deductible and now you're at $6,000, that's information you would want to prepare for. So very important to see that. We're seeing this happen in literally every state this year.
Man.
Another big one, extended replacement cost. Okay, so first things first is 60% of homeowners in the United States are underinsured. You can look that up. Why is that a thing? A lot of it has to do with your real estate agent referring you to a mortgage lender who refers you to an agent. Certain agents only match the purchase price of the home. Okay, huge mistake. There's three values to a home: market value, what it will sell for now; loan value, what you borrow. Insurance should always go by replacement cost. What that replacement cost means: cost to build that home exactly how it is in today's dollars. Now, we know in 2021, lumber went up 364%. Okay, and lumber's getting ready to do that again if you look up lumber futures. So it's very important to make sure that your home's in an accurate replacement cost. Secondly, you want what's called an extended replacement cost rider. There's a 25% and a 50%. What that means is when you have that endorsement, it will pay an additional 25% of the replacement cost above that. Why is that important? When you get North Carolina or Snowmageddon in Texas, automatically supply and demand, lumber goes through the roof anyway. So if your home was $200K to replace, it's more like probably $312. So you would need that rider just to be made whole. But lumber costs are going up. So that's another factor. Inflation, supply and demand, it's all there. So first of all, you want to make sure your replacement cost is accurate, and brokers can run that and get it accurate. We have a construction software. We look it up and run it in real time. But you also want to make sure you have what's called extended replacement cost, because it's getting used frequently due to the volatility of large scale storms and just lumber going through the roof in general.
Yeah, I want to add on to that. If you guys haven't looked at any of those pictures of Asheville, I just saw this yesterday, that there's a lake that's downstream from where all that flooding was called Lake Lure. I know is a real popular lake in that area. That entire lake, the whole surface of the lake is covered with the debris of all that.
Yeah, it looks.
Yeah,
like
I was just thinking of like how much money in lumber that's going to be.
It looks like a lumber yard. You can't even tell that all that's sitting in water. It's unbelievable. Yeah, and so that's the thing. The rising cost. It's one thing that if your home burns down, okay, what do we got to do? But if an entire town burns down, I assure you that 2x4s are not the same price. And does your homeowner stack up to the new cost to rebuild? It's an important thing to figure out.
Yeah, it's something.
Yeah.
So yeah, you can talk about this checklist here. Sorry.
Yeah. So that we put a complimentary link in here. Okay. This complimentary link will send you to a web page. Again, this is not to sell you anything. We don't do any advertising of any kind. This is a comprehensive and thorough checklist for your homeowner's insurance. The amount of information that is in this checklist is more than any broker or agent will probably tell you in their history. And that's what we're big on, is that we're big on educating people to make better financial decisions. Okay. So like Trevor alluded to in the beginning, the importance of home and auto. Here's the way we look at it, right? I've always said this. If you have a financial advisor that's making you money, that's great. If you have a CPA or an accountant that's saving you money, even better. If you put all that in a trust, because we know wills don't work, that's even better. We accumulated stuff, we saved money on stuff, and now if I pass away, we know where it goes. But if your home and auto's missing an endorsement, that's a liquid event. Now you got to pull out finances, you got a tax situation, and the trust isn't accurate. So we feel that this checklist, it's complimentary to you. You just click the link and look at that checklist. You will learn more about home and auto insurance in that checklist than you probably ever learned in your lifetime. And it's just complimentary to Trevor's audience. right? For you to be able to look at these things and ask yourself those questions, or look at your homeowner's policy and see if it stacks up to the way that it needs to, so that you can avoid everything we just went over in those previous slides.
Yeah, man. That thinking about, well, I was looking at those stats you were talking about. I looked at this morning. That stuff's already going up. Like the death count, unfortunately, is going
Yeah.
up.
Yeah.
Real quick, I did put that link to that checklist in the comments section, so it should be for this event in LinkedIn and on YouTube. Check in the comments. You can click on that link. And I went through it when I got the link, and even I learned. I mean, I learn about some of this stuff and some of the professional designations I've obtained, but even I'm learning stuff and personal experience. Testament here to Chris. I went to go talk to him because I know it's important to look at that stuff. I went with somebody who I had been introduced to, who knows this stuff, and I won't get too far in depth, but I thought I had like really good, solid coverage. Chris took me through his process, showed me a lot of stuff where I was being inefficient with my policy. And, we're working together right now. He's able to save me $800 a year between home, auto, and personal liability policy, which I was like, wow, this is me who talks about this stuff all the time. And I didn't even realize how much I was overpaying and how much, how unprotected I was. So appreciate that personal testament from me to everybody watching this video. Highly recommend checking him out. Again, too, if you want to set up a call with him, check out his website, e3insure.com. Tons of great info on there that goes a lot more in depth than we have in the 15 or 20 minutes that we're talking about today. So, Chris, I really appreciate you sharing your knowledge and experience with us. Anything else that you wanted to add before we hop off here?
No, just a little tidbit. So, anybody that gets on there, clicks the link or the website, interested, we do free complimentary reviews. We don't sell people. We don't put them in newsletters, any of that stuff. But if you want a complimentary review, just give us a call or drop an email, put military money mistakes in there. Okay. And regardless of what state you're in, whether we're even licensed in it or not, we will do a complimentary review to show you the holes in your current policy and where you can better those so that you don't end up unfortunately, it's a lot of these circumstances that we're finding folks in today.
Awesome. Yeah, I doing the process too. I'll tell you this, it was very easy to get it done. So definitely recommend checking him out. And again, appreciate anybody who's watching this right now live or the recording of it. Again, too, if you have questions about the military retirement or transition process and you want some additional info on your options, especially regarding survivor benefit alternatives and what to do with your TSP, come check out the militaryretirementblueprint.com. And again, keep watching for new content here on YouTube. And of course, we always put this stuff out on LinkedIn too. So, Chris, really appreciate you hopping in here with us and looking forward to maybe having you back in the aftermath of all this is kind of a recap to see, where people could do better.
No, I appreciate you having me on the show.
All right. Well, thanks everybody. We'll see you next week.